So, Tom, what do you make of these drawdowns? They do seem to be regulation sort of provoked sell downs. I mean, actions from China banning ICOs, shutting down Bitcoin exchanges by the end of the month, et cetera.
Yeah, I think there's two factors. One is I think there is a liquidity effect because, China exchanges are, 30% of Bitcoin volume. So if you're going to give notice to shut those down, obviously there's going to be forced selling. I think that's what we're seeing. And as Seema pointed out, there's been 7 times we've seen a drawdown of this magnitude. In 2015, Bitcoin was 183. Now it's 4,000. So you still had to buy all those pullbacks. But the second part has obviously been, a lot of folks talking about Bitcoin being a bubble or a fraudulent currency. I think you need to be on the other side of that very strongly.
But why?
Well, for instance, number one, Bitcoin is not as widely held as people think. If you look at, so we have some data. There's only about 300,000 holders of at least $5,000 of Bitcoin. So think about that. That's like saying the iPhone was a bubble in 2007, 4 days into the sale, because there were 500,000 iPhones sold. I mean, it's not that many holders of Bitcoin. When you think about how many wallets there are today that hold $5,000, it's huge. So I think it's still very early stages. And I think it makes sense for Bitcoin.
Why isn't that not a negative, though? Why isn't it that?
I agree with that. That would have been my point. Less hands makes it
exactly.
more speculative,
adoption.
more volatile, more bubbly, more like tulips.
Well, what you have to remember is Bitcoin is a fat protocol. So that's what makes this different than other technologies, meaning the actual network itself is generating the value so that the visa of Bitcoin isn't going to be as valuable as the blockchain network itself. And that's why, for instance, to make a fraudulent transaction on Bitcoin today, it would cost almost $30 billion to create one fake Bitcoin. So it's a very secure, trusted network because of the nature of blockchain. So I think it can be very threatening to financial institutions to see that, hey, trust is created within a network and a distributed network. By the way, from a generational perspective, I think people under the age 30 think that makes perfect sense. I think it's just sort of not the norm today.
So where should Bitcoin trade? What's it worth? What's it worth in a year, in 2 years, in 3 years?
Well, I think that the best framework still, and it's not worth it to try to look at Bitcoin as 2 weeks ahead or whatever, is to think of it as a store value. So the way people in the 80s treated gold as the store value because they never trusted dollars, I think another generation of people think of Bitcoin and the blockchain it embeds is the store value. If it's 5% of gold in 5 years, it's $25,000 per unit.
$25,000 in 5 years.
And yes, and it's $3,300 today.